Have you ever wondered what it takes to be a long-term investor in this country and in countries around ASEAN? James Hay, a British-born investor, arrived in Malaysia in 1993 and has never looked back since. After losing his job in the 98 Asian financial crisis, he dumped all his money in the public space and went backpacking. In 2004, he founded Pangolin Asia Fund and has never looked back since. The fund has grown over 12% in annualized returns since that point in time. I sat down with James Hay to better understand his philosophies and try to understand and unearth what it takes to be a long-term investor in Malaysia and in ASEAN.
I started the fund at the end of 2004, but I think we have to go back a bit. I'd been a stockbroker living in Malaysia for the previous 5 years, from 1993 until 1998. And I lost my job in the Asian financial crisis. And I really had no job, but I had some savings. Luckily, I was forced to save via the EPF. So in about August 1998, having been made unemployed, I took every penny I had and I bought 3 or 4 Malaysian companies, which were very cheap. And one of them was Nestle. I know it was Nestle. Nestle was on a single-digit PE in those days. Public Finance, which no longer exists, it's now being taken over by a public bank, was another company I bought. So I put every penny I had into the Malaysian stock market. I then bought a rucksack and I went backpacking for a year. And I came back a year later and my Malaysian portfolio had doubled and I hadn't done anything to it. And pretty much over the next 5 years, so 6 years in total, up until from 98 to 2004, that Malaysian portfolio went up approximately 11 times. And that effectively gave me a financial backing to be able to start my own business. Without having to listen to anybody else or raise money, I was able to continue investing how I wanted to independently. And so some friends of mine said, why don't you start a fund? And they said, we'll give you some money. So I thought about it. And then other people were saying, start a hedge fund, start a long-short hedge fund. But I don't know about hedging. All I know about is identifying companies which I think are really cheap and buying them. And if they are cheap enough, the market will discover it and catch up sooner or later. So that was the idea behind the Pangolin Asia Fund.
These benevolent friends of yours, when they gave you the funds, are you okay to speak about how much?
Yeah, we were tiny. When we started, we were $1.6 million. I launched with $1.6 million in December 2004, which is meaningless in fund terms. I was rather blasé, to be honest. I thought money would just come. We had a fairly bad first year. In 2005, we lost 2%. The market was up. We bought a Malaysian company which turned out to be nothing like we thought it would be. I think now the directors have been charged in court. It was called Silverbird, which is the bread manufacturer. I think you all know about it. We bought 10 companies. We lost half our money in that, so that's why we were down. But to start with $1.5 million and then to market to serious fund investors, not individuals, but serious, institutional investors overseas, is very hard because they just say you're too small. It's meaningless. You need to be running a decent amount of money. So it took us a very long time to get going.
Mm-hmm.
But I've done a lot of marketing. I've spent a lot of time in Europe. Increasingly, I now spend a lot of time in the States, and gradually the money came in. We got up to about $7 million by 2007.
Dollars, yeah, not ringgit?
Yeah, dollars.
Yeah.
It's a dollar fund. So we're a Cayman Islands fund. Effectively, it's a hedge fund structure. We are the management company is actually in Singapore. It's not in Malaysia. I wanted to do it in Malaysia, but back in those days, it was not possible for a foreigner to do that here. And then, of course, after the Asian financial crisis, we had the global financial crisis, and we went from $7 million to about 3.8 million. And the fund lost 38% in 2008. But then we started, we doubled again. We went up 95% in 2009, and then we started getting traction.
What's the size that you are at right now?
We're currently at $135 million.
All right, and of course, when you translate that to ringgit, it's like close to $500 million ringgit already.
Absolutely. Yeah.
Over the years, you have achieved a very significant number, which is 12.5% over the 13 years of the Pangolin Asia Fund lifespan. This is the envy of many investment funds in the country. I wouldn't say the whole world, but it is indeed outperforming many of our institutional investors. And taking from a statement that you just said just now, it wasn't easy to start up a fund here in Malaysia, particularly if you're a foreigner. I remember you saying this to me many years ago as well when we first met. What has changed? Why was, say, for instance, Bank Negara a little bit more hesitant in allowing foreigners to start off funds here in Malaysia?
I think you have a very protected fund management industry in this country. They don't really want foreigners coming in. I remember reading somewhere that the mutual fund industry here, or the unit trust industry here, has the highest margins of almost anything in the world. You have a fairly captive audience as well with the EPF and PMB and everyone else. So I think this is one area where Malaysia doesn't welcome foreign competition. It's not the only area that Malaysia doesn't welcome foreign competition. And we also had the backdrop of the Asian financial crisis, where, of course, Dr. Mahathir blamed everything on hedge funds. I remember seeing a chap at the Securities Commission saying, "Can I do this?" And they said, "No, we don't want any of that hanky-panky here." So basically, Malaysia doesn't have a hedge fund industry, and Singapore is running billions. And it was so easy. In those days, I only needed a local director and a $1 Singapore paid-up company to start managing money. Now, the regulation was light, but in Singapore that the enforcement is heavy. Mm-hmm. Yeah. I mean,
so you're not regulation averse then. You're looking for enforcement.
We're in favour of enforcement. Absolutely. Yeah. I think enforcement is everything. I mean, again, it's a Malaysia thing in a way. There are lots of laws, but enforcement is sometimes not what it can be. But I think they have now changed it. I think last year or the year before, the Securities Commission has come out and said that foreigners can now open boutique investment houses. I'm not sure how many have done so, but it is now in place. Despite
all this, Malaysia has been your home. You've been living in Malaysia more than you have in any other places. Yeah. What's the allure about Malaysia?
I find Malaysia an interesting place to live. I like the people, I like the pace of life, I love the food, of course. I actually like investing in Malaysian companies. I like visiting Malaysian businesses. There's a different dynamic here. You have a huge range of industries. We all know, people talk about being an Islamic country, but you've got breweries, you've got casinos, you've got, and then you've got utilities, plantations, manufacturing, all sorts of manufacturing, and then you've got all the government-linked companies as well. So you've got it's an interesting place to go and see, to invest in. And I get a kick out of talking to business people. So we're not sitting there watching the screens all day. We're actually talking to people about their businesses. And in Malaysia, there's almost 1,000 listed companies. Unfortunately, the number's coming down, not going up at the moment. But I have so many interesting meetings with people, and I always learn something from every visit I do. I don't only look at Malaysian companies. Yeah. We invest in 4 countries so far. But
the philosophy of your investment, other than getting into the fundamentals of the company, the financials, and of course speaking to the business owners themselves, do you rely heavily on, say, business reports, analysts, and other research reports?
Well, the idea of pangolin, I mean, you all know pangolin, or Malay tenggiling, is an animal, an anteater living in the jungle, eating termites. So we said we'd start a company. We'd call it Pangolin to draw attention to the plight of a highly endangered species. It's the world's most heavily trafficked animal, but it's one that looks under leaves for its food. And we like to say we look under leaves for our investments. So we're looking for companies which other people aren't looking at in many cases, and that's certainly how we started. These companies are not covered by analysts. So although we read lots of reports, so it's what we do, our time is spent reading and researching, I have 3 analysts in Singapore. One of them is Vinchal Budahaja, who runs the office down there. He's been with Pangolin for 12 years now, 13 years now, and then 2 others. So most of the real research we do ourselves, though we occasionally brokers give us something as well.
There's also a slant towards consumer companies, and again, I remember you telling me that there's nothing that gets you off other than watching consumer companies grow. Yeah. Is the sentiment still the same after these many years of working in this fund?
Yeah, I first came to Asia in 1987, my first trip. I've lived in Asia since 1993, and I've seen the change in consumption patterns, how people dress, what people spend their money on, people owning more cars, more motorbikes, eating more burgers, eating sandwiches, eating bread. I mean, you go back to your parents' generation, bread wasn't every day. Now, most urban professionals probably have a sandwich most days, and it's quite normal to eat bread. Televisions, satellite televisions. You can just see the growth in consumption as people get richer. And this is still a part of the world where this generation are better off than their parents, and the next generation will probably be better off than us as well. And that's not the case probably in the States, or certainly not in Europe anymore. It's very hard to maintain the same living standards as your parents now.
Some of the consumer companies that you invest in, the price is already out of reach for many consumers. Nestle is one of them. They're well into the double digits.
It's almost 100, yeah.
Yeah, yeah. The expectation is that they'll breach that $100 mark, the 100 ringgit mark.
Yeah.
So
you and I have both just had a Nescafe coffee from the machine. In Malaysia, Nestle has, I think, Nestle might phone you up and say I've got this wrong, but it's something like 7.5 million Nestle sales every day in Malaysia. So out of a population of 30 million, that's effectively 1 in 4 people buying something from Nestle every day. When you think about it, it ought to be higher. You think of how many Nescafe Panas, Maggi, Milo, etc. But as we get richer, instead of paying 1 ringgit or 1 ringgit 50 for our Warung Nescafe, we start drinking Nespressos and things like that, and we start paying $1 US for the same thing or more. So Nestle is very clever at, as we get richer, still selling us more stuff for more money.
And of course, because of that, they understand the target segment, they understand the market segmentation accordingly. How about you? What about your market segment? Because I have here the report that you normally hand out to your viewers, your fund investors. There's a clear marker there. As much as you say that you are investing in these kind of segments, you spend a whole deal explaining why you're not investing in another segment, which is mostly in rainforest destruction.
So we take an environmental angle, right? So there are a few things we will not invest in. Okay, we don't invest in government-linked companies. Okay, because government-linked companies tend to be awarded businesses because they're government-linked companies, not necessarily because they're the best people for the job. And you might get a few angry viewers phoning up about that. We don't invest in plantations or timber, but because of their environmental impact, right? And if you just fly over Sarawak, for example, you will see that it starts off as plantation, then it starts off as younger plantation, and then it's cleared forest, and then there's a little bit of forest left. Unfortunately, it is a driver of deforestation, and the pangolin is very dear to us, so we won't invest in that. We don't invest in commodities businesses because I don't know what commodity prices are going to do. And I'm sure you've had enough experts on telling you oil's going to go up to 100 or down to 20. And as far as they might be right. Half the time I think maybe they're right, half the time they're wrong. I have no idea. But all I know is that as Asians get richer, if you look at Indonesians, you look at, if you go back a while when Malaysians used to work in paddy fields, and you go to Indonesia, there's still Indonesians obviously working in the paddy. A girl working in a paddy field, there's no point in her getting up and putting on lipstick and doing her face up and doing her hair and then going out in the mud all day under the sun. There's no point. But once people move to cities, they start spending, then they got an office job, they're checking out their reflection in the building on the way to work. People want to look good, and they have a bit more money and they start spending more money. So that's why we like the consumption sector. I mean, generally, it's a long-term growth sector. And the Asian financial crisis didn't kill it. The global financial crisis didn't kill it. There are interruptions, of course, but generally people are consuming more.
I'm sorry to sound naive, but are you worried that a lot of other fund managers and hedge fund managers are going to come and watch this interview and they're going to see the sensibility in your investment philosophy and say, you know what, I'm going to get in on the game as well?
Well, it's been happening for a long time. Remember, we have actually been in a bull market since 2009. So owning shares has worked pretty well for anything. So there is always a lot of competition there. I think, I'm not sure what our difference is. I think our difference is that we deliberately target investors who can hold things for a long time. And that's why we're spending more time in the United States. They tend to have longer term thinking than some Europeans, I'd say, not all Europeans. So we're not a UCITS fund. You can't redeem quickly. You have to give us 60 days notice. It's only every quarter, that kind of thing. Mm-hmm. But yeah, I mean, there's always competition out there. There isn't always, I mean, when the market's down, my life is really easy. The hard bit is attracting money because, but that's when other people tend to retreat. Mm-hmm. It's got a lot harder. We used to buy good consumer companies on 5-8 times earnings. Mm-hmm. But they're not really around, they're not really there at the moment. We've got one in Indonesia we're still buying, but they're harder to find. But what we are finding is actually the medium-sized companies in Malaysia, and we've got one in Singapore as well, tend to be overlooked as well. And these are quite, they're medium-sized or large-ish, And so we've been putting our money to work in some of those recently.
Okay, and let's zoom out a little bit and focus a little bit on ASEAN.
Yeah.
Again, another focus in your newsletter is on your passion towards investing in ASEAN. Is ASEAN still having that allure as it was, say, for instance, a decade ago?
Yeah, a decade ago it was cheaper. I mean, if we go down to the end of 2009, it was incredibly, beginning of 2009, it was incredibly cheap. Yes, I'd say so. I mean, Malaysia grows at around about 5% a year, though nobody seems to be feeling it, in terms of the man on the street. Indonesia's growing at more than 5% a year. Well, we've got to hope that, and Indonesia's the largest economy in the region. We've got to hope that once there will be benefits from the infrastructure that's being built in Indonesia, that should add quite a big kicker to the economy. At the moment, because they've removed subsidies in order to spend the money on infrastructure building, the man in the street's feeling it quite hard. But Indonesia has changed, probably more so than Malaysia has over the years, and it's come from a lot further behind. It's now reasonably easy to set up a business in Indonesia. I mean, when I first came to Malaysia, when I met another expat, it was about 1993, you'd meet an expat at a party and they'd say, how long have you been here? And he'd say 6 months. So you haven't got your work permit yet? And he'd say, no, I don't know why not, but it still hasn't happened. And I'm having to go to Singapore every month or whatever. Malaysia's got past that now, that's all pretty efficient now in this country. In Indonesia, that was the case for a long time as well. It just never happened, and finally happened. But Indonesia has now moved, and they've cut down a lot of red tape for that kind of thing. So it makes foreign investment much easier. So Indonesia is transforming itself from being purely a commodities play to actually a manufacturing play. And that's very important because Indonesia, as there is now a nascent middle class out of a population of 250 million people, it means that if you're Nissan and you only manufactured in Thailand, if you now open a plant in Indonesia, you can sell some cars in Indonesia as well. As well as then exporting into ASEAN and elsewhere. So Indonesia's changing.
What about some key markets like Vietnam as well?
Well, Vietnam, so far we have not invested in Vietnam. From a top-down perspective, and I'm going to a Vietnamese presentation after this, but from a top-down perspective, the whole place looks a bit overheated to me. The market's had a very strong run and a lot of the blue chips are certainly overvalued. Having said that, my colleagues spent 2 weeks there at the beginning of December, end of November to beginning of December, and they found 3 or 4 companies which they want me to go and see, which do look very good value. So at some point in the next month or two, I'll be spending some time in Vietnam. But there are still opportunities in our traditional markets. Malaysia, nobody looks at Malaysia. It's really an under-researched market.
Tell me more. What do you mean by that?
Well, because...
Hang on. I just want to tie this with the fact that you said that Malaysia grows at an average of 5%. Yes, this year was slated to grow at 5.5%, but nobody on the streets.
Well, it's not
certainly I don't feel it.
It's not very investable. Which one? Why aren't people feeling it? I don't know. The trickle down isn't coming down to the lower consumer, right? Price of petrol's up. People's wages aren't going up. I think also the world is changing. Yeah, and perhaps what Malaysia does. And also, you have to remember that for Malaysians, that the jobs at the bottom, which ought to be getting more technologically advanced, like construction, for example, and if you go to the West or Singapore or some buildings in Malaysia, you'll see very modern construction methods. Here, they just keep importing more Malaysian, keep relying on Bangladeshi and Indonesian workers to keep working the same way. So there aren't the highly skilled construction jobs on offer to Malaysians. So the jobs at the bottom, there's never any increase in skill, and therefore what people are going to be paid for them. So that may well be part of it too.
Okay, and tie this with the statement that you just said just now. Malaysia is underinvested.
It's an underinvested market. It's underowned. I think I can't remember what its representation, because we don't look at indices, but its representation in MSCI Asia ex Japan is what, 2% or something, and it's hardly worth, if you're a fund manager who follows these things and wants to invest regionally, having 2% of your fund in Malaysia, double it to 4%, it makes no difference, right? You might as well just have a bit more HSBC in Hong Kong or a bit more Alibaba, or all these countries alone. So these companies alone are just about bigger than the free float of Malaysia. You then have a market where the larger companies tend to be government linked. There's a limited free float. So to find real businesses within the largest segment of of the index in Malaysia is quite hard. So a lot of people don't look at it. Then secondly, we then don't have effectively what you have in Singapore, which is a thriving independent boutique fund management industry here. Now there are some, and I'm sure you've had them on the show, and then you've got others like Aberdeen who are larger and drill down, and there are, you know, I'm always a bit scathing in the mutual fund industry, but there are some very good managers, and some of them run some very good smaller funds. But you can still go around and see companies who have basically never seen an investor before. Mm-hmm. And that's a lot of it because the industry is in Singapore, and you know, yeah, is Malaysia worth the effort for foreigners? It's hard to justify.
Do you invest in private companies?
No, only listed. Only listed.
And why is that? That has always baffled me.
Why?
Yeah, why? Why not?
Well, I think it's easier. I'm quite a lazy guy. Yeah. If I own a private company, I've got to be on top of the management, right? Yeah? If I look at a listed company, there's a track record. We don't like newly listed businesses, so there's a track record of a listed company. So you can see how they've behaved going back a number of years. So basically, you own a good business, say it's in consumption, we can look at the balance sheet, we can see it's a net cash business, we can see it generates cash every year. What does the management do with this cash? If they generally reinvest it in the business, which is providing good returns, that's why we're interested in it, and then what is excess is given back as dividends, we can see that track record, and we can talk to the management and say, is this likely to continue? And then based on our judgment, if we think it will continue, we can invest. We get a quarterly report. They are regulated by various people. They have to provide audited accounts. They're independent directors. We can go to the AGM. There are other shareholders there as well. At some point, we can also see the share price go up. I think, personally, for me, it's just what I do. It's a lot easier than owning a company privately.
What you just described doesn't reflect the fact that you're lazy, actually.
Well,
seems like a lot of hard work.
Yeah, but yeah, okay. But
if this is you being lazy,
well, maybe I'm non-confrontational. I don't want to sit in there and have a meeting with I own 20% of a private company. How do I sell the shares if I don't like it? Right? We do buy companies. We do sometimes fairly quickly, or sometimes a bit longer, realise that we ought to sell them. I can sell my position on the stock market. It's just, for me, it's an easier process. Now, I'm sure you've had PE guys on who just say, actually, it's much easier to own companies and do it privately.
And even VC, not even VC.
So it just depends who you are and what you like doing. But for me, listed is what I like. Yeah.
Okay, and we now know that the retail investors segment for Bursa Malaysia is dwindling. Yeah. To say that they are running away is not strong enough of a word. They are not here, and they're not running away from equities. They're running away to other markets. Yeah. They're running away to Singapore and many others. Yeah. Isn't this a reflection that investors are indeed shying away from Malaysia?
Well, the market doesn't. It's a very low beta market. The market doesn't do a lot. The index goes up a bit at the end of the year, you know, but it's had a reasonable run. It's catch up. Yeah, but really, yeah, I mean, there's not that much excitement in it. I say it is an under-researched market. I know Bursa has tried to improve it. They've got the Bursa research scheme and everything else, but Malaysia is building what's going to be a new financial centre, isn't it, the financial exchange. Who's it going to be filled with unless Malaysia opens up its fund management industry, yeah, and really opens up its industry?
What do you think is stopping Malaysia from really liberating and liberalising the market?
I think that the profitability of the domestic players is a big disincentive to open up. Yeah? I mean, that's it, and yeah.
But that's the whole concept of market liberalisation.
Yeah, it is the whole concept of liberalisation. But it hasn't happened properly. It's not. I mean, it's happening, but at a very slow stage.
Doesn't the word that comes to mind is cognitive dissonance. Malaysia is a lovely country, lovely people, lovely food, lovely weather, lovely everything, and yet we have this kind of very restrictive, very cumbersome, very confined way of doing things in the financial markets, and for that matter, the business world.
Yeah. So what people always say is that Singapore's a great place to work. You should live there. Okay, well, Singapore's a great place to work, but Malaysia's a great place to live. So I live here, but I work in Singapore, and that's where it all kinds of take place. I don't, but yeah, Malaysia for me has its charm, and as I say, there are so many businesses here, and lots of good businesses here. But also, as there are in Thailand and Indonesia and elsewhere.
To listen to more of our conversations with industry leaders and key influencers in Malaysia, go to www.awanireview.com. We provide in-depth discussions and hard-hitting conversations with the difference makers in the country, discussing key issues close to Malaysians' hearts.